Dear students, we will do a new module. That module is 39. In this, we will learn about the computation of income from let out house property. It's divided into two parts. Module 39 is part 1 of this computation. So, we will do 3 problems in this module. First problem, simple problems. Compute income from let out house property from the following information. Municipal rental value. Municipal rental value is equal to 1,80,000. 1,80,000. Rent received during the year. Rent received during the year is equal to 2,40,000. 2,40,000. Municipal taxes 50% paid by the tenant. Municipal taxes is equal to 18,000. In that 50% only we will allow, because whatever is paid by the owner only we will take it into account. Expenses incurred for repairs by the owner 30,000, by the tenant 30,000, collection charges 10,000. We will not take this matter into consideration because we are allowing 30% of net annual value as standard deduction. Now, problem is to compute the income from let out house property. So here municipal tax is 1,80,000, rent received is 2,40,000. So the expected rental value is equal to 2,40,000. Whichever the higher value we will take, and municipal taxes less municipal taxes, that is equal to 18,000. So we have to reduce 50% of that, which is paid by the tenant is not allowed. So 2,31,000. 2,31,000 is the net annual value. Since no other, this is the gross annual value, or the no other information is available. So from gross annual value we have reduced municipal taxes, so we are getting net annual value. Now deductions under section, less deductions under section 24. This is the standard deduction. It will not be mentioned in the question. So you have to remember 30% of this net annual value is allowed. That value is 69,300. So the income from let out house property, income from let out house property is 2,62,700. 1,61,700. 1,61,700. 1,61,700. 1,61,700. So this is the first problem. This is a very simple problem. Now we will do the problem 2. Now we will do problem 2, that is Mr. A submits the following details about the house property he has rented out for commercial purpose. Compute income from let out house property for the assessment year 25-26. So here in this MRV, municipal rental value is equal to 1,44,000. 1,44,000. FRV 1,48,000. FRV is equal to 1,48,000. 1,48,000. Standard rent is 1,60,000. Standard rent is 1,60,000. Now, actual rent is 1,92,000. 1,92,000. 1,92,000. Municipal taxes 14,400. Municipal taxes 14,400, and interest on loan taken for the purchase of the house property. Interest is equal to 45,000. So how we will do this? We will see this. First one is, here standard rent is given. So first step is between these two, whichever the higher value we will take. 1,48,000. Between 1,48,000 and this value, whichever the lowest we will take. So here also 1,48,000. Expected rental value. Annual rent is given, so expected rental value and this value we have to compare, and we have to take the highest value. So 1,92,000 is the gross annual value. Gross annual value is equal to 1,92,000. Less municipal taxes. Municipal taxes 14,400. 14,400. Then you will get the net annual value. Net annual value, that is equal to 1,77,600. Now interest standard deduction we have to reduce. less deductions under section 24. Standard deduction 30% of this value. It is not given in the question, so we have to remember that value is 53,280. 53,280. Then interest on loan, that value is 45,000. 45,000. So these two values we have to reduce. So that meaning 98,280. You have to reduce from this. So the value is 79,320. 79,320. So that is the second problem. Third problem. Now third problem you have to remember. Mr. G has two flats of equal dimensions which are given on a rent of 10,000 each. Following expenses are incurred in connection with the house properties. Compute income from let out house property. Municipal taxes 10% of municipal value, that is 2 lakhs. Fire insurance premium 2% of municipal value, 2 lakhs. Rent collection charges for the first house 6,000. We don't have to consider that. Repairs and alterations 10,000. We don't have to consider. Interior decoration charges 20,000. We don't have to consider. Legal charges for the recovery of the rent from the first flat 10,000. No need to consider. Interest on loan taken for the construction of the flat 42,000. 42,000. Conservancy tax in addition to municipal tax, that also we have to take. So with few information we have to do that. Here we have to do the computation is divided into two. First flat and the second flat. So here first flat net annual value. We have to calculate the net annual value. Municipal tax for both the houses is 2 lakhs. So municipal rental value 2 lakhs. We are dividing it into both the houses. 1 lakh. Now municipal tax is, when actual rent is 10,000 each. So actual rent is 1,20,000 for both the houses. It's given on 10,000 rent, 1,20,000. Now whichever is the higher value, we have to take actual ERV is equal to whichever is the highest value. That is 1,20,000. 1,20,000. 1,20,000. Now less municipal taxes. 10% of municipal value, that is 10,000. 10,000 and conservancy tax 3,000 divided by 2, 1,500. So 11,500 we have to reduce from both the houses. So 11,500 we have to reduce. Then you will get 1,08,500 as the net annual value. Net annual value. This is equal to gross annual value because no other adjustments are there. Now from this we have to take less deductions under section 24. Less deductions under section 24. Standard deduction will not be mentioned, but you have to remember 30% of this. 30% of this is 32,550. 32,550 for both the houses. So construction interest for the loan taken for the construction of the second house. Interest, first house is not there, second house is 42,000. So if you reduce these two values from the net annual value, then you will get here income from first house property is 75,950. 950. Second house is 33,950. 33,950. So total income from the let out house property is 75,950 plus 33,950. You will get 1,09,900. So this is by adding these two values. So this is the computation, and 3 problems I have explained. This is what I wanted to explain in this module. Happy learning. Thank you.